But I just want to get your thoughts, though. As China continues to, I guess I wouldn't say close its accounts, but sort of limit the outflows, how is that affecting your business?
Well, obviously we are seeing less of a flow of money from China. So it's certainly not a, it's not a welcome.
Yeah, you've done very well in China through partnerships. The last time China put in the capital controls in late 2018, your account growth dropped in the double digits. There's news now of the U.S. now restricting capital flows to China. Do you see a similar impact? How does that impact your business now?
Well, similarly, we see fewer and fewer accounts opening from China and less money flowing to us from China. But other Asian countries make up for it. So net Asia is sort of stable.
Could you elaborate a little bit more? What are those other markets in Asia which perhaps might help offset the weakness, the current weakness in China?
Well, obviously we have many customers in Hong Kong, in Singapore, in Australia, in India, so in Tokyo, for example. So we are very active in all these Asian countries, and as China is diminishing in significance from our point of view, other countries are making up for that.
Thomas, what does the move to zero commissions mean for your business and the broader industry?
From our point of view, the zero commissions haven't changed anything because on September 26th, we announced a bifurcation of our offering into IBKR Pro and IBKR Lite. Now, IBKR Pro is the same offering that we have had for years, where we offer professional execution and high interest on idle cash and low interest on margin borrowings. And but the most significant aspect of it is the professional executions. Now, as you know, most other brokers have been sending their orders to high-frequency traders to fill. We have always executed our customers' orders ourselves with a very sophisticated technology, so that on most orders we can achieve a price in between the bid and offer. Now, other brokers have been receiving a payment for these orders from the high-frequency traders who execute the orders. We have been saying that to our clients over and over and over again, but some of them wouldn't listen, and they keep saying, why can't you charge us a smaller commission? So we said, you know what, we'll charge you a zero commission, but your orders we will send to high-frequency traders to execute just like other brokers do. So that's what we announced on the 26th of September. And suddenly, 4 days later, Schwab came out with zero commission, and it was rapidly followed by Ameritrade and E-Trade and other folks. So that's where we are at the moment.
But look, the stock has obviously been hit and pressured by this move. Your own net wealth has been pressured by it as well. What does it mean in terms of margins for the business? And are you looking for additional revenue streams to make up for the losses from these zero commissions?
Well, but as I say, we do not expect a revenue change due to this, because we are most of our customers are professional customers who understand the importance of a professional execution. The execution price is more important than the commission. Our average commission on the average stock trade is only about $2 and change. The difference on, for example, if you want to trade 1,000 shares, the difference in the execution price of 1 cent makes a difference of $10 for you. So professional traders understand that, and that they are most of our customers, so we do not expect them to change to IBKR Lite. But some retail customers will look for zero commissions, and they will change to our IBKR Lite offering. But the rebate we will get from the high-frequency traders is roughly equal to the commissions that we charge
Right.
at IBKR Pro. So from our point of view, it doesn't matter whether a customer is using IBKR Pro and gets best execution or using IBKR Lite and gets zero commissions. We make the same amount of money on the trade either way.
Yeah, it does seem, at least based on what you're saying, sir, it's one pocket to the other. What does this mean, though, for others in the industry who perhaps don't have your business model? I mean, does this lead to more consolidation? Do you see any of your competitors, big or less big, as perhaps more vulnerable, that you might be even looking to perhaps look at as a transaction itself?
So for most brokers, moving to zero commissions is going to be a net loss equal to the commissions that they have been charging and no longer will in the future. And now some of them will try to make up for it by maybe other charges, and they will offer maybe investment advice and new features that they can charge for. But as I say, for us, it is a revenue neutral situation. As far as mergers, everybody is talking about E-Trade, that they maybe will have to merge with Ameritrade. I'm not really convinced that will have to happen. So I don't know. I mean,
Thomas?
E-Trade's business could just decline, and the other brokers can just take over that business, take over those customers.